Just $10 a day could make you a millionaire, and I can prove it. The wealthy have used dividend investing for generations to build fortune after fortune, and today I'm showing you exactly how to do the same. In this video, Harry will discover how combining carefully selected dividend stocks and ETFs can transform spare change into a wealth-building machine. Forget get-rich-quick schemes. I'm talking about a proven strategy that's accessible to anyone with the discipline to invest just $10 daily. In this video, I'll break down why $10 a day is the perfect starting point for building wealth, how to select the best dividend stocks and ETFs for consistent growth, specific investment vehicles that can supercharge your portfolio, the incredible power of dividend reinvestment, how to potentially turn your small daily investment into millions, and in the end, I'll show you a complete portfolio strategy that could change your financial life forever. Let's face it, traditional saving methods aren't cutting it anymore. With bank interest rates below 1% and inflation at 2 to 3% annually, your money is actually losing purchasing power over time. That emergency fund sitting in your savings account? It's slowly disappearing. Harry has been saving $300 monthly for years, but is frustrated with his lack of progress. At this rate, financial independence seems impossible. The problem isn't that Harry isn't saving enough. It's that his money isn't working hard enough for him. What Harry and millions of others need is a strategy that generates returns above inflation, takes advantage of compounding, and creates multiple income streams, all without requiring a massive initial investment. This is where our $10 day investment strategy comes in. By contributing just $10 daily, you're investing about $3,650 annually, an amount most people can manage without drastically changing their lifestyle. But here's the magic. When invested in dividend-paying stocks and ETFs, that small daily amount can grow exponentially over time. Why dividends? Because dividend investing gives you two powerful wealth-building tools. 1. Capital appreciation, stock price growth. 2. Dividend income, cash payments from companies. Combined with reinvestment and compounding, these two forces create what I call the Dividend Snowball effect, a wealth-building machine that accelerates over time. Let me show you 6 specific investment vehicles that could form the foundation of your $10 day strategy, each playing a distinct role in building lasting wealth. Building Block 1. Core Dividend Growth Stocks. Let's start with 2 cornerstone dividend growth stocks, Home Depot, HD, and ABBV, ABBV. Home Depot, HD, is a dividend powerhouse in the consumer cyclical sector. As of April 2025, HD offers current dividend yield 2.6%, 16 consecutive years of dividend increases, 10-year dividend growth rate of 16.3%, 5-year annualized total return of 14.3%. If Harry invested $10,000 in HD 10 years ago with dividends reinvested, he would have approximately $36,300 today. Home Depot's strong market position in home improvement retail and consistent dividend growth make it an excellent foundation for a dividend growth portfolio. Next, let's look at ABBV, ABBV, a healthcare giant that offers current dividend yield 3.7%, 11 consecutive years of dividend increases, 53 years if including its Abbott Labs history, 10-year dividend growth rate of approximately 13.9%, 5-year annualized total return of about 20.4%. ABBV has consistently outperformed its industry average, demonstrating its ability to navigate challenges like patent expirations while maintaining strong dividend growth. The company's diverse pharmaceutical portfolio provides a defensive element to a dividend portfolio. Both HD and ABBV represent the ideal balance of current income and growth potential, starting yields above the market average combined with double-digit historical dividend growth rates. Building Block 2, the Dividend Champions. Next, let's examine 2 remarkable dividend stocks that prioritize consistency and reliability: American States Water, AWR, and Altria Group, MO. American States Water, AWR, is the ultimate dividend reliability champion. Current dividend yield, 2.3%. An extraordinary 71 consecutive years of dividend increases, 5-year dividend growth rate of 8.8%, 10-year annualized total return of 8.9%. As a utility company with long-term government contracts, AWR offers exceptional dividend safety. Its beta of 0.6 indicates lower volatility than the market, making it an ideal holding during market turbulence. For investors seeking high current income, Altria Group, MO, delivers current dividend yield, 6.95%, one of the highest among large-cap stocks. 56 consecutive years of dividend increases. 10-year dividend growth rate of about 7.2%. 5-year annualized total return of approximately 15.0%. While Altria faces headwinds in its traditional tobacco business, its high yield provides substantial current income that can be reinvested or used to fund other investments in your portfolio. The company's strong cash flow generation continues to support its dividend program. These companies demonstrate different approaches to dividend excellence. AWR through unmatched consistency, and MO through exceptionally high yield backed by decades of increases. Building Block 3. Diversified ETF Approach. For broader diversification with minimal effort, exchange-traded funds, ETFs, are essential components of our $10 strategy. Let's examine two outstanding options: Vanguard S&P 500 ETF, VOO, and iShares Core Dividend Growth ETF, DGRO. The Vanguard S&P 500 ETF, VOO, provides broad market exposure, current dividend yield, 1.42%, as of April 24, 2025. Rock bottom expense ratio of 0.03%. 5-year return of 94.73%, as of April 24, 2025. Assets under management, $573.62 billion. Excellent diversification across 505 holdings. VOO is the perfect core holding for any portfolio, providing exposure to companies like Apple, Microsoft, Nvidia, and Amazon, which make up over 22% of the fund. Its extremely low expense ratio means more of your money stays invested and working for you. For more targeted dividend growth exposure, the iShares Core Dividend Growth ETF, DGRO, offers current dividend yield, 2.36%, as of April 24, 2025. Low expense ratio of 0.08%. 5-year return of 69.12%, as of April 24, 2025. Focus on companies with sustainable dividend growth. Diversification across 409 holdings. DGRO's top holdings include dividend stalwarts like JP Morgan Chase, Microsoft, ExxonMobil, and Johnson & Johnson. The fund's methodology specifically targets companies with histories of consistent dividend growth and financial strength to sustain future increases. These ETFs provide instant diversification at minimal cost, making them perfect for your $10 day investment strategy. Portfolio construction strategy. Now that we've explored the individual components, let's see how Harry can combine them into a cohesive $10 day investment strategy. The key is balancing current income, growth potential, and risk management. Here's an optimal allocation approach for a $10 day, $3,650 annual investment. Core ETF Foundation, 40%. VOO, 25%, $912.50 annually. Broad market exposure. DGRO, 15%, $547.50 annually. Targeted dividend growth. Dividend growth. Individual stocks, 40%. HD, 20%, $730 annually. Consumer cyclical exposure with strong dividend growth. ABBV, 20%, $730 annually. Healthcare exposure with above average yield. High yield and super consistency stocks, 20%. AWR, 10%, $365 annually. Unmatched dividend consistency. MO, 10%, $365 annually. Maximum current income for reinvestment. This balanced approach gives Harry 1. Instant diversification through ETFs. 2. Focused exposure to exceptional dividend growth companies. 3. Stability from utilities and non-cyclical sectors. 4. Enhanced current income for faster compounding. Using a broker offering fractional shares and automatic investments, Harry can easily set up this $10 plan. Many platforms now offer commission-free trading and automatic dividend reinvestment, eliminating barriers to implementing this strategy. Growth projections. The power of consistency. Let's see what Harry's $10 strategy could achieve over time. We'll use historical performance as a guide while acknowledging that future returns aren't guaranteed. For our calculation, we'll use $10 day, $3,650 annual investment. Portfolio blended dividend yield on 2.5% initially. Portfolio blended dividend growth 10% annually. Portfolio blended price appreciation 8% annually, 100%. Dividend reinvestment. Here are Harry's projected results. After 5 years, total invested $18,250. Portfolio value $23,000. Annual dividend income $700. Monthly dividend income $58. After 10 years, total invested $36,500. Portfolio value $62,000. Annual dividend income $2,100. Monthly dividend income $175. After 20 years, total invested $73,000. Portfolio value $210,000. Annual dividend income $9,300. Monthly dividend income $775. After 30 years, total invested $109,500. Portfolio value $570,000. Annual dividend income $35,000. Monthly dividend income $2,917. That's right. After 30 years of consistent $10 day investments, Harry could potentially generate almost $3,000 in monthly dividend income, creating a substantial passive income stream. The magic happens in the later years as the dividend snowball effect accelerates. Notice that between years 20 and 30, Harry's portfolio value grows by $360,000, even though he only invests an additional $36,500. This exponential growth is the power of compounding in action. The Reinvestment Accelerator. The true secret to transforming $10 a day into massive wealth lies in dividend reinvestment. When Harry reinvests his dividends, several wealth accelerators activate simultaneously. 1. Compounding on compounding. Each reinvested dividend generates its own dividends too. Dollar cost averaging. Automatic reinvestment means buying more shares when prices are low. 3. Increasing share count. Ownership stake grows without additional capital contributions. Let's take ABBV as a specific example. With its current 3.7% yield and historical dividend growth, here's how a single $10,000 investment could grow over 30 years with all dividends reinvested. After 10 years, without reinvestment, $25,000, capital appreciation only. With reinvestment, $36,000. Difference, $11,000, 44% more wealth. After 20 years, without reinvestment, $62,000, capital appreciation only. With reinvestment, $130,000. Difference, $68,000, 110% more wealth. After 30 years, without reinvestment, $155,000, capital appreciation only. With reinvestment, $450,000. Difference, $295,000, 190% more wealth. The gap between reinvesting and not reinvesting grows dramatically over time. This is why dividend reinvestment is absolutely essential for Harry's $10 a day strategy to reach its full potential. Practical considerations. To successfully implement this $10 a day dividend strategy, Harry should follow these best practices. 1. Automation is essential. Set up automatic investments and dividend reinvestment to maintain discipline and remove emotion from the process. 2. Choose the right account type. Utilize tax-advantaged accounts when possible, IRA, Roth IRA, to maximize long-term growth potential. 3. Be patient during market downturns. Market declines are actually opportunities to acquire more shares at lower prices, accelerating future growth. 4. Monitor but don't overtrade. Review portfolio components annually, but avoid frequent changes that increase costs and taxes. 5. Start today. The most important factor in this strategy's success is time. Every day delayed is a day of potential compounding lost forever. Remember that consistency trumps timing, and the power of growing dividends combined with reinvestment will do most of the heavy lifting for your wealth-building journey. We've seen how Harry's simple $10 day investment strategy, focused on quality dividend stocks and ETFs like SCHD, ABBV, AWR, MO, VOO, and DGRO, can potentially create significant wealth over time. Investors might also consider SCHD, which offers a similar dividend growth approach with its focus on quality dividend payers. This method works whether you're targeting financial independence, a comfortable retirement, or building generational wealth. Ready to stop being broke? Let me know which dividend investment catches your eye in the comments. If you found this valuable, your like and subscription helps bring more content like this. Remember, wealth comes from consistently investing in quality dividend payers, then letting compounding work its magic.